A deed of variation can be really useful in many circumstances, but what is the reality of actually using one, and how does it work when you're dealing with a property that is rented out? Hi, I'm Kimberly Shapcroft, qualified chartered accountant, property investor and entrepreneur. Let's sit down and have a chat. A deed of variation is a really useful tool when you're dealing with inheritance tax. So let's start with what one of these is, and then we'll deal with what happens when you start using them. So a deed of variation is where a will has been put in place, inheritance tax planning may or may not have been done, and now you are in the process of dealing with the inheritance to find that actually you want to do something different with it. A deed of variation is a document that you can put in place which changes what the original wishes are in the will. Now check out the video on the channel which goes into a lot more detail on this. However, that is our starting point for why we're asking the question we are today. And that question is, what happens when we actually put one into place? What is the reality of how it works? And the reason we're asking what the reality is simply because what if you've got a property that's been rented out for the whole of the period, the person who originally owned the property has passed away, that has then had some rental income that continues coming in because that hasn't changed, the tenant is still in situ, but now you've got someone who inherited it that may not have wanted that, and when they've come to talk to family, friends, whoever inherited the different elements on the will, it may be that they've negotiated and said, well actually I don't want this, but I'd prefer to have the cash, or I'd prefer to have the family home, or whatever it may be with siblings. And now you've decided to do a deed of variation to actually change what is going to happen. Now in doing this deed of variation, that obviously changes what happens, but how does that rental income get dealt with? Because we've already had that rental income come in, we've already dealt with the different elements of things. What tax return does the rental income go on? What happens when that change happens? Is it immediate? Does it backdate? How does it all work? So let's address this hopefully quite simple question, but actually, however simple the question may be, there's a few different elements of who has what where and who needs to report what on what tax return. So let's just clarify that. So if you're ever in this position, you know what to do and you know where you stand with your personal tax position. The position is actually quite straightforward, and it's quite logical in how it works, which is fabulous for tax rules because they sometimes get a bit crazy and don't always follow what one would call normal person logic. However, in this position, the person who originally inherited would inherit that property, that income, at the point of the person's demise, in line with whatever is in the will. At the point that a deed of variation is done, whether it be up to the 2 years that you're allowed to do one, at the point where the deed of variation becomes a legal binding document, this is the point where the tax position changes. So from the will's point of view, the will go back, and basically the deed of variation is revising the original will. So the will stand with how it sits. However, from a tax perspective, the change in the date is the date of the deed of variation, and you don't have to backdate anything. So if you think that you've got parents, a parent has passed away, there's a rental property, maybe there's other cash and other things that are going on, and one of their children out of two has received in their inheritance the rental property. They will then report any rental income that has been received on their personal tax return, up until the point of any changes are made. Now it may be that the siblings go, well, I don't know why they've left you the property, I'm the one in property, I'm interested in having that, why don't we flip things around, I'll give you some of the cash that I've inherited, I'll take the property, you can then go and do what you want with that money, I'll keep the property as part of my ever-growing portfolio. So in that situation, the original child that received that inheritance would report that income on their personal tax return. If they're not doing one, they would need to register for self-assessment to be able to report that rental income, and they would report that up until the point of the deed of variation. At the point of the deed of variation, that would then transfer in our scenario there to the other sibling, and then that person would then on an ongoing basis report any of the rental income and expenses going forward. So hopefully that actually makes the situation quite straightforward. It's just making sure you know what dates are impacting when to ensure that the right period is being reported on the right person. In effect, after the deed of variation date, the income becomes the income of the new beneficiary, including income arising before the date of the variation deed, which is not distributed to the original beneficiary. So this really depends how the process has worked, how quickly everything's been able to be resolved or not. In all situations, I'd work with your probate solicitor or your probate guidance, or work together as a family to make sure that you're following everything through, to ensure that you're understanding what needs to be dealt with, how it needs to be dealt with, and depending whether it's an extended period of estate and it takes a number of years to resolve the estate because there's more complications, or whether it's a straightforward estate and things can get transferred into appropriate names straight away. When dealing with this type of thing, it can get a little complicated. So I'd always suggest that you seek advice from professionals to ensure that you're doing things correctly and make sure that you're reporting your income, any trust or legacy income correctly on your personal tax returns so that you know that you are doing everything square. Hopefully today you've discovered exactly how it fits together if you do a deed of variation and how it fits with your rental property income. If you have any questions, then please do leave a comment. Please like the video and do subscribe to the channel, and let's make tax less taxing.